can't be that easy to become a millionaire, right? Only investing in 2.5 funds. That seems way too good to be true. Well, according to the financial advisor my one buddy uses, you would need more than that because they have him in 15 different funds. Do-it-yourself investors are no different because I see a lot of them throwing every possible type of fund into their portfolio like they're trying to hoard Crystal Pepsi before it's gone forever. Sometimes I wonder if I'm the crazy one because as of right now, I'm going to retire a millionaire by only investing in 2.5 funds while also spending less than 10 minutes per month on my portfolio at a cost that is 85% lower than the average investor. Let me show you why I think a 2.5 fund portfolio is the best option for most people and why investing any other way is a waste of time, effort, and money. I'll have to admit that if you really twisted my arm, then I do approve of potentially adding one specific type of fund under certain circumstances. So I will tell you which one that is later in the video. Just so we're all on the same page, when I say a 2-fund portfolio, I am referring to an all stock-based portfolio. Sometimes you'll see a bond fund added, but in my opinion, that is what I would consider to be a 3-fund portfolio. The first of the 2 funds is a total US stock fund of some sort. This type of fund holds literally every single US stock out there, from the largest to the smallest, so it gives you exposure to the entire market. There's no need to hold theme-based funds, sector funds, dividend funds, small cap funds, or anything else because you already own every single one of the stocks that would be in each of those funds. You're every type of investor when you hold a total US stock fund. Here's a quick cheat sheet for this type of fund from different providers. Now, my personal preference is to always choose Vanguard no matter what because okay, to be honest, they have me on the payroll to shill their products on the internet.
I'm just kidding you, pal. I saw your face. You were like,
Contrary to the comments I receive, no, they do not pay me, although I would gladly take their money if they actually wanted to pay me money. Either way, we can still be friends if you use any of the other funds. The half fund that I referred to comes from being able to swap out this total US stock fund for an S&P 500 fund. There's technically no reason to hold both types of funds if you don't have to, but sometimes all we have access to is an S&P 500 fund within our company-sponsored retirement plans. The second of the 2 funds is a total international stock fund. Now, just like the total US stock fund, an international fund like this holds pretty much every stock for companies outside of the United States. By every stock, I'm talking almost 8,000 of them spread across every region and country that you can think of. Once again, on screen, I'll show you options from different fund providers. The ticker for your employer-sponsored retirement plan is most likely going to be different from these. So just look for a low-cost total international ex-US fund. By just investing in these 2 funds, you're spreading your money across almost 12,000 stocks. From large companies to small companies, terrible companies to very profitable companies, and from countries on the come up and countries on the decline. You're agnostic to which companies do well and which ones do poorly. The only thing that matters is whether or not those businesses as a whole are going to continue to try to innovate, grow, and earn more money. The 2-fund portfolio is based on the principle of Occam's razor. It suggests that when considering multiple solutions, aka the endless amount of ways to invest, the simplest one is usually the ideal option. The idea of Occam's razor would encourage investors to avoid very complex and confusing strategies that rely on a ton of variables, complicated models, or unnecessary speculation. Instead, it suggests focusing on straightforward and well-established investment principles such as diversification, long-term investing, and low-cost total market funds. There is no correlation between doing more work by adding complexity to how you invest and a better outcome. In fact, the more work you try to do, the more likely you are to screw something up, which, now that I think about it, the average investor is really good at since they're known for underperforming the market. Simple is the best solution. Jack Bogle, the legendary founder of Vanguard, said something that's always stuck with me. Please don't equate simplicity with stupidity. A 2-fund portfolio is so simple that anyone can understand it. There's nothing more annoying to me than when someone is hesitant to invest because they put it in the too difficult to understand category. If you want to help support my little dog Molly as well as this channel, please make sure to hit that thumbs up button and share the video with someone you think needs to see it. When I told my one buddy that all he needed to do was to invest in 2 funds as opposed to 15, he looked at me like I just told him that I was pregnant. He didn't believe investing could be this simple, but in reality, it is. His financial advisor, who charges a fee based on assets under management, would never tell him that because, as you can see, they put him in 15 different funds when 2 would have done the trick. The more complicated they make your portfolio, the more they make it look like you need them. Complexity is job security for those losers. Plus, a 2-fund portfolio couldn't be easier to implement. You just buy 2 funds and that's it. It is nearly impossible to screw up. There's no going back and forth on which is the best stock or fund to buy, like if you were investing in a sector fund, theme-based fund, commodity fund, or whatever those idiots on stock picking YouTube channels are pumping up this week. Having too many options for what you could invest in will end up burning you in the long run. You also don't have to worry about trying to capitalize on a certain hot area of the stock market because you already own everything that will go up in value. I have good friends who call investing their hobby. They're like,
oh my gosh, Jarrad, but I just love investing in all of these little things because it's a hobby to me and it's so much fun.
No! God, please, no! No!
yes, they're my friends, but I think they're all absolutely insane. The last time I checked, a hobby isn't supposed to have the potential to blow up your financial future.
And it's gone.
They're no different than people that go to the casino knowing that the odds are against them to lose money. It's stupid. Once you're set on a 2-fund portfolio, maintaining it barely takes any work. This can be done in less than 10 minutes every single month. Actually, probably 0 minutes if you turn on auto deposits and auto invest and use something like my preferred investing platform, M1 Finance. Because of their pie investing, M1 Finance handles all of the work for you. They'll spread your money across 2 funds automatically based on the asset allocation you set up ahead of time. No need to waste time trying to calculate how much money needs to go towards each fund, then clicking into each one to press the buy button. There are really only 3 things you need to worry about when it comes to maintaining a 2-fund portfolio. First is hanging on to this portfolio no matter what's happening in the stock market, economy, or around the world. With a 2-fund portfolio, you're committing to riding the waves of the stock market up and down and not flinching by messing with your portfolio. Trying to adjust your portfolio in the middle of a market downturn will screw everything up, so please don't do that. The second thing you have to worry about is making sure you're continuing to contribute money to your account on a regular basis. Trust the process and stay invested no matter what. And the third thing you have to worry about is adding a bond fund when you get closer to retirement. At that point, you only have to worry about selling off 2 different funds to add a third one. My buddy, who I mentioned earlier in the video, has to waste time trying to figure out which 15 funds he's gonna have to sell out of to buy a bond fund when he gets closer to retirement. I usually don't do public math, but going from his 15 funds down to 2 is an 86% decrease. With a 2-fund portfolio, when the world is changing, you're already on top of it since you own every single stock in the stock market across the world. Think of all the buzzwords that we've heard over the past few years. Metaverse, AI, electric cars, green energy, 5G, VR, Mary Jane? Where'd all of the funds go that were dedicated to each of those? You know, the ones that you were told to add to your portfolio to quote unquote beat the market. Weren't they supposed to be the next hot sector? Welcome to the world of finance, where very specific funds are created for the media to pump up and to make the investor think that they're getting in on the ground floor of the next best thing. But in reality, those funds only exist to drain the pockets of and take advantage of ignorant investors. I remember hearing about a breakfast ETF that was charging an insane 0.80% fee. Surprise, surprise, less than a year later, they had to close the fund because it performed terribly. Pro tip, the longer you invest and the more you pay attention, the more you realize that nothing has changed except the story and the characters. The media and YouTube channels will continue to blow things out of proportion, fear and greed drive behavior, and the financial industry will continue to try to drain the pockets of average investors. The theme is exactly the same and the cycle will continue. With a 2-fund portfolio, you're opting out of all of the nonsense in the investing world that's happening right now and will continue happening until the day that you stop investing. Speaking of the financial industry draining your pockets, with a 2-fund portfolio, you're also reducing your costs massively, which will leave you with way more money and allow you to retire a lot sooner than most people who don't pay attention to this. Let me show you how much it's going to cost you from some of these fees that are really high. A simple Vanguard ETF-based index fund within a 2-fund portfolio is going to cost roughly 0.03% per year. This works out to be about a 0.90% decrease in retirement funds after 30 years. When you compare that to 3 other types of fees charged by non-index type funds, the investor is getting ripped off. Would you rather stick with a 2-fund portfolio where you're paying roughly $10,000 after 30 years, or fill your portfolio with multiple high-fee funds where you're paying 8, 15, and 22 times the amount? That tens of thousands or hundreds of thousands of dollars in savings will allow you to retire sooner by just choosing a 2-fund portfolio. You also most likely won't need to be paying an advisor who charges an ongoing fee to manage your portfolio, because it's super easy for you to handle it on your own since it's 2 funds. Yep, even working with those types of advisors, it'll cost you hundreds of thousands of dollars and decrease your retirement funds by 26, 36, and 45%. I break these numbers down in more detail, as well as other reasons why most investors will retire broke, in a video that I'll have linked above my head and at the end of this video if you want to check it out. The additional fund that I approve of people adding to a 2-fund portfolio is a small cap value fund. I personally think that there's enough evidence to where it could make sense to add a little bit of exposure to it, but only if you're willing to hold on to it for very long periods of time. I personally don't add small cap value because I don't feel 100% confident that I'll be able to ride it out through the ups and the downs at this point in time. Knowing how much money you need to put into each of these 2 funds is very important to its success. I show you how to figure that out in this video to your left. Please make sure to hit that thumbs up button and share the video with someone you think needs to see it. More ways to help support the free content on this channel are down in the description below. Done.